Okay, welcome back to the program. I'm speaking to Deborah Fuhr, who is head of ETF research and implementation for Barclays Global Investors. Deborah, we were talking about geographically-based ETFs. You have a sector of global ETFs betting on industries. Basic materials has done well. It's up 26% year to date. Technology up 22%. Utilities, boring and safe, and nobody wants boring and safe right now, down about 9%. But again, how popular are these proving?
Yeah, you do find that many people are moving towards using sector products, because the challenge in this market environment is if you believe in a sector, trying to pick the one right stock is quite challenging for many investors. So there really has been a movement towards using ETFs for sector exposure. And that's especially true even for institutional investors, because you don't have many sector futures. So in many cases, institutions would use futures to equitize cash. If they want sector exposure to the U.S., globally, and various other markets, you find that you don't have futures. So you do find that the ETFs are used both for investors who want to go long, as well as those that want to go short or put on hedges. So increasing use there.
I mean, that signifies that people are broadening their horizons, if you like. ETFs allow them to do that, because we're also getting a lot of people betting on commodities in various different ways. Now, iShares doesn't have that many pure commodity ETFs, at least listed on the Bloomberg system. You track gold, you track silver, and you track the S&P GSCI Total Return Index. Is that something that's likely to be expanded?
Well, clearly, the role my team has is doing research on the whole industry, so we're not involved in the product development side for the iShares business. But I would say that what they do look for is areas where they think their investors are going to be interested in developing products. You do find there's a complementary set of products that is issued by Barclays PLC, which moves into the notes area, so exchange-traded notes. Barclays PLC issues what's called iPass, and so you have iPass that are available to trade commodities, currencies, and also the volatility index. So there are a number of products that are out there that are available.
We have an email from Vipul who says, what do you think about gasoline for the next few weeks? Have gasoline ETFs proved popular at all?
Well, energy, oil, etc., has been very popular. My team is not making calls and is not making calls telling you where to invest, but rather, if you have a view, we're helping you to look at what products you might use to implement that exposure. We have seen a lot of interest, though, in energy and the ETFs or ETNs on the oil segment.
Okay. It's fixed income. Again, an interesting area. You've got iShares offers various products on long-dated and short-dated maturities. You also offer Treasury inflation-protected securities, and you also offer a short. Now again, this is an area. People don't understand Treasuries very well, but they do understand when they think things are going to go up or down, or where people tell them they're going to go up and down. Short funds, are you finding them becoming more attractive?
Well, iShares made a strategic decision not to go into the leverage inverse products. So there's other providers that have products that give you 2- or 3- various indices. Those products have been popular, but I think many people haven't really understood that these products are saying each day they'll give you 2- or 3- the index. So based on the fact that they're rebalancing each day, over time, it's not a straight 2 or 3- whatever index that you've bought. So I think investors have to be careful, because I've seen many investors, based on path dependency and volatility, actually ending up not getting the exposure that they wanted. And because of the daily trading inside the funds, these products have paid out significant capital gains, which is one of the things that the standard ETFs that were originally set up in the U.S., because they have very little trading inside the funds, don't pay out significant capital gains relative to other active funds or index funds in the U.S. So I think people have to make sure they read the prospectus and understand the products before they invest.
You have answered my next email, which came through from Scott. We'll show it anyway. It says, what's the risk of using 2 or 3 times inverse ETFs for holding more than one day? As you've said, basically, you can lose 2 or 3 times your money, and there are various other mathematical complications within ETFs. Those things can be dangerous, like anything can be, if you don't understand them. Very quick definition. Can you give me the difference between an ETF and an ETN?
Sure. So an ETF is an exchange-traded fund, so funds that are structured just like any other fund that you would see out there, which means in terms of investor protection, the assets of a fund are held at a custodian ring fence. So if something was to happen to the manager of an ETF, the board of the fund would appoint a new manager. If you look at exchange-traded notes, they're unsecured debt of the issuer, and therefore you have 100% counterparty exposure. So if something was to happen to the issuer of a note, you would have to be waiting in line with the administrator to determine how much money you would get back. So you find many people today are preferring the ETF structure over ETNs or certificates or structured products. But in many cases, an ETN is the only way to get exposure to some of the individual commodities or other asset classes that are quite difficult to buy if you're not allowed to trade futures, as an example.
Deborah, thank you very much indeed for that explanation, and thank you for your time today. Deborah Fuhr, Global Head of ETF Research at Barclays Global Investors. Email